Hey there, everyone. Dave Keller here with Market Misbehavior, and welcome to another episode of our Market Misbehavior podcast. Our goal with this podcast is to sit down with top market practitioners, talk to them about their process, their decision making, understanding how they approach the markets from the macro to the micro and everything in between. Really fun conversation today with cryptocurrency expert Adrian Zduńczyk. Adrian is the founder of the Bird Nest. He's a fellow chartered market technician, or CMT charter holder. I met Adrian a couple years ago, interviewed him for Stock Charts TV, and really enjoyed how he was able to draw on his experience directly involved with the cryptocurrency markets with the best practices of technical analysis. I'm a big fan of how he approaches the market from a technical perspective, and I've always found conversations with him pretty compelling. I've always wanted to sit down with Adrian virtually and talk about specifics of the cryptocurrency space. Questions like Bitcoin dominance, thinking about, technical analysis versus other information you can assess about cryptocurrencies, like on-chain data, like digital wallets and other information sources. Talk about some great work he did with Jeff Hirsch, editor of the Stock Traders Almanac, on Bitcoin seasonality. It was the first study I had seen a couple years ago on seasonality within Bitcoin, and loved following up with Adrian on his take there. We talked about just thinking about the trajectory, I guess the growth curve with Bitcoin, with all the proliferation of Bitcoin, now Ethereum and other crypto-related ETFs becoming widely adopted. I was very interested because Adrian posted a note on social media recently sharing how he was starting to unwind a decent position in Bitcoin. So I was able to talk to him about why he was starting to play, the other side after riding Bitcoin to a position of strength. What are the warning signs that told him to start to unwind that position? I'll let Adrian answer that question as we go on through the interview. Also, we started off with some great questions about music. Adrian is a fellow musician, and we've found that mutual connection between the two of us. I hope we have an opportunity to sing together at some point. But for now, please enjoy this great conversation with Adrian Zduńczyk, founder of the Bird Nest. Super excited to be sitting down again with Adrian Zduńczyk. Adrian, you and I met a couple years ago, and it's been so wonderful to get to know you, to learn from you in terms of your exposure and understanding of the cryptocurrency space. It's been fun to talk charts over the years, and I'm super excited to continue that conversation today. So welcome to the show.
Thank you so much. I'm really always blessed to have you, and so good to see you, Dave.
So let's start off with a very non-crypto question. You and I are both singers, and we don't talk enough about music on this podcast, so we're going to start there. Talk to me about what type of, you and I are performers, right? And I get that when you start speaking, you can tell. I know you sing in a number of different venues. Talk to me about where that fits into your life. What does music mean for you today?
Oh man, what a hook to start off! Jeez. All right, I should add a disclaimer that the more I drink, the more I sing, basically, right? And it works backwards as well. No, jokes aside, I mean I've been singing for the past 15 years, more or less on an amateur basis. At one point I had just as we all do, I stood at a crossroads, basically deciding, okay, I should go for the professional career or for the musician career. That it was a heart over mind battle, so to speak. And rational over emotions, and I chose for the time being. My parents always convinced me that you do your homework first and don't have fun afterwards, right? So this is what I followed. I'm grateful for the lesson. And right now, funnily that you ask, it kind of like is a point in my life where both of those paths they cross over again. And just a couple of a month ago, I've put together, kind of like leveraging the network, the reputation that I've built over the years, inside of the crypto, and kind of like escalating that into other traditional aspects of the finances and of the business, so to speak. I managed to reach out to Justin Timberlake's band and the managers and the friends, and we had good time together. And I organized like very, very big event in Poland at that point, where I united the business side, the crypto side, and Justin Timberlake's friends, band, the management.
Yeah.
And lots of very, very famous people, came by The only person missing apparently was David Keller. Though next time we're not gonna make this mistake though. So there were a couple of performances that I was singing with my men's choir as well, a cappella. There was an
Wow.
octet. There were 8 people in the folks. I always sing the tenor too, the lower tenor.
Yep.
I mean, it's a whole variety of the voices, because in the men's choir, like as opposed to the mixed choirs, you would have the TTBB, basically kind of like a harmony setup, right? So
Yeah.
the upper tenor, the lower tenor, the baritone, and the bass in the men's choir versus the soprano, alto, tenor, and the bass. So
Yeah.
here's the vocal range of the men's of men basically is a little bit tightened out towards the downside of the range, towards the down of the scale, which is why it makes it very often blended, and the harmonies when not arranged well, they're gonna sound like a little bit blurry. It's gonna be difficult to tell apart the voices, as
Yeah.
opposed when you have a full scale and full range of the soprano, alto, and so on. So at times we do sing, when we do take on the soprano, alto, the full kind of like a mixed range. So I sing, alto at times, the vocal parts of alto with my falsetto, and the soprano as well on top. So it's fun part. There's a lot of fun on that, and like I said, it comes with my it's the time where it comes and it crosses over, where this 80-20 balance that I've had over the years for the professional against the music, it is right here. It met, and next year I'm planning to reactivate, with whole brand new ideas, a little bit of the musical career. So I'm hopefully gonna get there.
Oh man, I'm cheering for you. So I sing second bass. I've sung in a bunch of choirs and over
You
the
did,
years.
all
So
right.
we've got a couple voices here. Let's keep building out a CMT choir. We'll see what we can
Oh
put
man,
together
I'd
for
love
an
to.
event down the road.
Then I have to ask me twice for that.
Count me in. Count me in. We'll figure it out. So I love to dig into the crypto space. Obviously, we have Bitcoin at new all-time highs. There's been broader and broader exposure, I feel like, from a very niche, less understood, less widely available asset class to something that through ETFs becoming much more widely, appreciated, but arguably still very, very misunderstood, I would say, probably in a lot of ways. I'd love to talk about a number of different things about Bitcoin, but talk to me about this. I mean, you as a CMT, as a technical analyst, you're obviously trained in how to analyze any market. Can you talk at all? Are there nuances to looking at cryptocurrencies? Something that comes to mind is they trade 24/7, so it's there's a lot of data involved, more than equities or ETFs. Are there any nuances or specific tools or techniques that you find resonate more with cryptocurrencies than you might expect?
Good question for a whole open up, whole different set of book and a nomenclature and an academic studies, I suppose. Long story short, I think crypto is as close as you can get to the free market principle, to the efficient market, so to speak, right? Because you would often have, you would not often see a lot of noise sources, noisy factors such as the financial statements, the earnings reports, and so on that you have every quarter, that typically kind of like cause a little bit of the ups and downs, and just twist the volatility up, basically turns it up just later on to calm it down. So you have a little bit more stability, so to speak. And how funny is that, when we're speaking of crypto, right? That you don't often have this noisy factors from the traditional world, and it's mainly free market driven, except for some, of course, like some insider trading and manipulations that happen across all of the markets anyways. That shouldn't be happening, but it is happening, and that's another point. However, crypto, because it's not quote unquote infected with the fundamental issues, right? It relies purely on technical analysis, right?
Yeah.
There are some on-chain studies, of course, so you could argue that the fundamental analysis can be attributed to the on-chain studies, the movement of the different wallets at different sizes, and whether it's a trend or it's just some local fluctuations. So we can argue, it's a little bit of an attribution towards the fundamental analysis, though. All things aside, the technical analysis, this behavioral factor, this community orientation, basically is exactly what pushes the narratives, is exactly what pushes those bubbles to exist and those market crashes to exist right after, right? So I think that we as the CMTs, we should put a lot of attention basically into trying to understand something as new, as propellant, as emerging as the cryptocurrency market, basically. because it's emerging not just because I say so, but because there's an actual interest. There's the institutional interest. There's the ETF interest that is reaching close to 150 billion AUM. So it's not just my words. There's an actual essence and proof in the pudding, so to speak.
It's interesting. You shared a number of charts. I'd love to start with this one, just looking at the growth in ETF assets. Obviously, one of the big, arguably hurdles with cryptocurrencies earlier on, right, in the life cycle was the lack of exposure, limited access, right? Unless you want to have your own digital wallet and have a key somewhere. My father is probably not going to buy Bitcoin in a digital wallet, but ETFs much more accessible. The growth in ETFs has been pretty impressive. What sort of impact do you see this having on not just the popularity of Bitcoin, but the upside potential of Bitcoin and maybe the stability going forward? What does this mean in your perspective?
And I have a great question, Dave. So I think it's a part of a maturity curve. It's part of the adoption curve for any new market, for any new emerging kind of like a technology, so to speak, right? So Bitcoin is following pretty much the path of what .com bubble did back in the day, of what the internet did, of what the AI is doing right now as well. So it's an adoption curve. It's a maturity curve that at one point, it kind of like opens up with a very aggressive growth coming from the early pioneers, right, as it develops. And again, you can compare it to the 90s, basically, of the dot-com bubble, as it arose, as it grew, as the internet was becoming a thing back in the day, as the whole telecom industry was growing. And at one point, there is this kind of like first success for the early pioneers, and then the other, parts of the world are starting noticing, okay, maybe there's something into it, right? So there's the late pioneers stage, so to speak. And at one point, when there is enough of the track record, the institutions start raising the interest there. And if the institutions are starting raising the interest there, well, the regulations follow. And at one point, the institutions are able to absorb a large portion of the market, which stabilizes the whole market and kind of like puts it closer to the plateau where the volatility diminishes, where the market capitalization grows. The whole market becomes more regulated, more I should say less prone to having this extreme gigantic growth, because it's a truck that's getting more and more load at the end of the day. And whenever this truck is getting bigger and heavier, it's more difficult to change and to shift it, right? It's like a big ship with a big cargo, and except that its cargo is basically the heavy loads of finances, right? Heavy loads of dollars into it. And even the Newtonian dynamics laws, basically, if there is a big heavy object, it's going to be more difficult to steer it. And as long as there is this force basically acting, this throttle pushing and acting upon the object, this object is going to continue to accelerate as long as this force continues to act, right? So this force is being the institutions right now. This force is being can be attributed to the ETFs. So the ETFs, though, in this aspect, is this door for which the institutional world has access basically to crypto that it never had before. And hence it increases this market capitalization by a lot. We're talking altogether about over $3 trillion asset. $3 trillion asset class as a cryptocurrency side. Bitcoin right now, as we speak, funnily enough, it's over the new all-time high, close to $113,000. 150 billion in AUM, basically. That is very, very close again from start of 2024. So a year and a half, 150 billion. Tripled the interest and demand on the institutional gold ETFs released in the early 2000s. All in all, it confirms day in, day out that it's one of the most sought after assets, and this builds institutional demand. And as the demand goes up, the prices follow.
Certainly seems like one of those positive feedback loops, right? And it's the more popular they become, the more interest there is, the more interest, it just kind of continues to grow and grow. One of the criticisms, I guess, of cryptocurrencies over time has been the lack of, I guess, for lack of a better term, practical use, right? Practical application, right? It's something that has value, but what can you actually use it for? Can you talk a little bit about, practical uses of things like Bitcoin and Ethereum? Have you seen that change? And how important is that for sort of the long-term growth of Bitcoin beyond what we've seen so far?
Oh man, very good question. And there's plenty of ways to answer that. First of all, the most practical use I find into it is making money. Basically, that's the most practical. That's the most practical use to it. And when you compare it again, 145% annualized gain, as opposed to 11% annualized gain in S&P, where the risk as it happened to be this year with Trump tariff war, the trade war. It happened that the S&P risk basically on the annualized standard deviation of monthly daily returns is basically it reached pretty much same of the Bitcoin risks, right? Same of the, or even exceeded Bitcoin volatility. So you have a situation where the traditional market basically of 11% annualized gain, if you take a Sharpe ratio out of this, basically to 70-80% at times volatility, as it happened to be for the annualized, again, as a standard deviation for when the COVID to zero, except that it's trade tariff war. This case that happened to cause this third largest crash in the American stock market history, in many metrics that were broken, record broken. Then you're looking at the Sharpe ratio of basically 11 against 70%, right? And when you compare it, those are not really big numbers, right? And when you compare it with Bitcoin, that returns 10x, tenfold more return on average, while the volatility is pretty much this or lower. Well, that it gives you tenfold better returns for the same amount of risk that you put in, right? So that is enough of a utility that it just makes you money 10 times better than the amount of money that you put on an average in the typical stock market return. So that's one thing. It just works for your money better. It doesn't mean you have to have 100% of money into it, right? It means that just maybe as a pension fund, as a hedge fund, as an institutional bank, as a country, as it happens, with the United States, there's a utility in taking that portion and a fraction of a percentage even added to the actual reserves, where Bitcoin becomes a strategic reserve asset, in order to elevate by a several percentage points added on top of the profitability for the fund performance, with very limited or corresponding risk, basically, that is, like I said, assigned similar to S&P. So the profitability is the main utility to me from the investment point of view. However, if you take a case study of Turkey, for instance, right? Turkey had a massive crash of the Turkish lira against dollar, basically, as in the valuation of Turkish lira, it went extremely diluted, so to speak, right? So there was a massive crash in how much wealth people were able to hold year over year, and how much waste, how much loss they actually had for holding their national currency. As a result, 60% of Turkish people hold cryptocurrency. They use Bitcoin. They use stable coins. Right? If you take a look at the third world countries, where the financial systems are very often corrupted and broken, just as it happens to a lot of governments being politically and financially corrupted, then you observe having an opportunity, an alternative to store wealth, right? So this is another big kind of like a utility to it. And then there's the whole lots of smaller and bigger utilities, such as payments, right? You can use, if you use digital payments, if you store your money into bank, well, technically you don't own this money, because you give it, you give the ownership for the time being to the bank for whatever interest or even lack of interest. So as a result, if the bank collapses, if the bank falls, just like you had with the SVB in 2022, 2023 post-mortem, where the interest rates jump up very high and very fast, then it basically suffocated a lot of institutional financial corporate companies. As a result of that, the trust against the banks, go down. So Bitcoin is very often thought, and crypto is very often thought, as an alternative to digital, to gold, as an alternative to banks, as an alternative of a different asset for storing the wealth outside of the regular financial system that those people believe that is broken. So it's an alternative. It's an opportunity for especially the third world countries, where the financial systems, like I said, are broken. There's like there was a case with the Brazilian real, their own currency, and the Venezuela, where people were making the actual baskets. They're creating with their hands, craftsmanship, basically, with the use of banknotes, that they sold the entire basket, or that they could put in some eggs or some bread into it, basically, that they sold it for more than the banknotes altogether were worth, right? So this is the real problem of hyperinflation, and crypto, is one of the way to solving it. It's not the ultimate thing, right? However, because it's generally on a consensus level, generally it's independent of any institution that may fall a victim of their own errors. It's considered safer on one hand. However, in the ownership, in the freedom, it doesn't come cheap. It also comes at cost, so that you can use this chance and you can use this opportunity, and when not managed, you can just accidentally slip your finger and sell 100% of the shares or 100% of the Bitcoin instead of 10%, and there's not gonna be any banker or broker to tell you that you're doing wrong. You only kind of like learn from your own mistakes. So there's the freedom comes at a cost, right? However, it gives you freedom to operate. It gives you the alternative. It gives you the payments, of course. Like I said, digital payments. If you use digital currencies, then even the CBDCs are centralized cryptocurrencies, right? Or cryptocurrencies are decentralized CBDCs. So it's all pretty much the same technology. Many banks are using the blockchain technology. There is a whole layer of decentralized finances, so you can have the lending, the borrowing, the staking, like I said, having earning interest on top of it, except that it's used with the digital independent wallets rather than your bank broker, right? And that comes at a faster, that comes cheaper, that comes more transparent. You can tell it all in the blockchain because it's a summation of all the single transactions happening in real time. So you can tell which address and to whom the sender and the receiver send what amount of money, so we can track it. When you can track it, it can be stored and used in the supply chain, for instance, solutions, right, for logistic companies. So there's it goes on and on and on, and there's multiple other reasons, I think, altogether coming to freedom of choice.
Yeah. It's so interesting. We just came back from a week in British Columbia, not too far from here, Western Canada. And it struck me, this is one of the first trips I've taken, although you've traveled a lot as well. You really don't need to convert a lot of cash into local currencies for very much. And it hit me that I think, except for tipping one person the one time during the week, I was using a card for everything else. And that could have very easily been Bitcoin or some other digital.
Exactly.
The line between, US dollars or Canadian dollars and Bitcoin are, I feel like, much thinner than a lot of people are thinking at this particular time.
Right.
You mentioned on-chain data earlier, things like, digital wallets, sort of the supply side, or I guess the fundamental side of Bitcoin. How much, when you're analyzing, Bitcoin, Ethereum, how much does on-chain data fit into your thinking? And are there any specific things that you've found to be helpful to help you understand how the picture's evolving?
Got you. All right. So I think I use it as a little bit of a different confirmatory resource, so to speak. Like I said, you can attribute a meaning of the traditional fundamental analysis to it, right? Because it gives you a little bit of a different context, except that it's not related to cash flows, because Bitcoin doesn't have a cash flow because it's decentralized, so to speak, right? However, it still generates some interest. You can still stake it. You can make an interest on top of it if you want to just store your Bitcoin. Long story short, by observing how much movement and tracking how much movement there is, and again, that is fact-based, that is evidence-based, it cannot be tricked, it cannot be confused, because it's all there and it's happening as it comes, as it goes, in real time. So it cannot be refuted, it cannot be denied. It's just happening, and there is a proof and there's a timestamp for each and every single transaction. You can track those movements. You can track those movements, especially from like heavy wallets, when they're like whale wallets, just like you would compare to whale issue holders or shareholders. Seeing their movements, so that for instance, that Jeff Bezos lately sold a lot of his Amazon shares, so he can be considered a little bit of a whale of a crypto, if we were to compare it, right? And by observing those big CEOs kind of like leaving, that very well, Dave, that a lot of CEOs leaving Impulse, basically, when a lot of CEOs exit, they typically exit because they have insider information. They have I should say, insight into their own company. They see how the businesses are performing at their job, and they know quite often they are knowledgeable enough to exit at the right time. And it's also working as a self-fulfilling prophecy, because if a lot of authorities, so to speak, people with a lot of perceived value or a lot of perceived influence leave a lot of the companies, it may cause a little bit of the panic and then accelerate the actual downfall. Anyways, so you can watch those big movers. That's one thing. However, in a simplest term, you can use this to track the divergences. For instance, when the price keeps climbing higher and there is a decreased wallet activity, or there's a decreased basically hash rate, which means that there's a decreased interest or engagement on the network itself, then you can, well, make certain anticipations, at least in the medium or near term, or medium term, near term or medium term. That's what I mean.
Yeah.
It may happen, it might coincide with an actual peak on the market, just like it happened in 2021. So if this happens, just like with many divergences, they come early at the risk of being wrong. However, when come lucky, basically, it may happen to save you a lot of money. So on that note, it's worth watching the market bloat, so to speak. So for instance, you want to watch how much market capitalization there is against the actual summation of all the transactions happening, because it may happen that the summary of all the transactions, if you add up each and every single transaction worth, that there is less money on the blockchain than there is in the market, which means that the market is overvalued. And when the market is overvalued, historically, well, there are many different metrics. One of them I used is called MVRV. So it's market value, realized value. So the realized value is the summation of the blockchain, so to speak, all the transactions summed up all together. So ins and outs and how much money it all calculates to, against how much money, how many investors basically are putting money into total market capitalization in the circulating supply. That translates into how much market bloat there is. And this MVRV, when expressed in a z-score metrics, basically, so they have number of standard deviations against the average. Well, specifically for the MVRV, he strictly peaked whenever the MVRV z-score ratio reached above 7. Right now, we happen to be at 2.4. Right? Okay. Which tells you that each and every single time before, when the market peaked, having the above 7 ratio, well, you can anticipate that we still have space on a comparative level, on a relative level, for the market to grow. Even though time-wise, for the cyclicality of it, if you analyze the time cycles and take an account of the presidential cycle placement, for where we are on the presidential cycle for your map. And here's a shout out to Jeff Hirsch, of course, on that note.
Legend,
of course, then the man. Then you know that in 2026 is a typical calendar bear market setup, right? The midterm elections, 66%, 100% of the time downfall, 66% average for Bitcoin for the fall in the midterm years, which is 2000, 2022, 2018, 2014, and 10, every 4 years approximately. Plus, with this aspect that Bitcoin has grown over 700% in the last 3 years, ever since bottoming out in October, November 2022. There's a lot of chips on the table. The institutions are piling up. There's a lot of interest. The interest rates are high, which is the blockage that keeps a lot of consumers and basically the retail investors, retail traders apart from the market, which is why we've not seen so much mainstream just yet. It also suffocates a lot of businesses, which is why there is not so much cash flow and the freedom and the risk tolerance, I suppose, as opposed to 2021 and the COVID era. All that together combines into a couple of months left in the cycle that I think are going to be extremely volatile with a lot of upside. So it may be that the biggest amount of money that you're going to make is just going to be in the tightest window of like 5% time remaining, basically out of the entire 100% of the cycle. And so personally, next couple of months for me are about exiting, right? So I have an exit strategy that I'm implementing that's going to take 6 to 9 months based on the cyclicality of the markets, based on the data, instead of my trying to guess, based on the actual risk measures. And beyond that, the strong correlation with the stock market, which by the model frames leads the economy by 6 to 9 months on average. And we saw in April the massive third largest crash in many, like I said, many records were broken negatively, which corresponds with 6 to 9 months delay, that by the end of the year, we should basically start feeling on an economic level the impact of that, which means that the economy is going to start suffocating from this massive fissure on the financial side. And that all comes together with the recession signals that we saw with the inverted yield curve from 2022, the calendar bear market, and a lot of overextended upside, basically from S&P all-time high, NASDAQ reaching very, very high, Bitcoin being 700% from the lows and still kind of like climbing higher. So it may get very, very nasty towards the end of the year, and my job is to mitigate that risk.
Wow. That was a day-long, masterclass level of data we just tore through there, Adrian. finishing with the zinger of sorts, and hard to deny that. I mean, you've seen such a negative rotation in a lot of things. However, the markets have recovered so quickly, right? I mean, the S&P and the Nasdaq back to new all-time highs, and despite a lot of macro conditions that arguably should be very negative for risk assets, they continue to climb, right? Can we look at a chart together if we could? I'd love
Please.
to look at some of the charts of Bitcoin that you brought. Reconcile what you just described about some of the seasonal challenges, which I 100% hear. And I first spoke to you soon after you and Jeff had done some of that foundational work on seasonality, which I thought was really, really interesting on Bitcoin in particular. Talk to me about how you reconcile these, this potential specter of a rotation with a chart that arguably still looks quite strong, right? From a technical perspective, how would you describe the action in Bitcoin to date here, mid-July?
Yeah, so like I said, there is a strong foundational kind of like a correlation. Even if you take a look at the correlation coefficient of Bitcoin against S&P against Nasdaq, it typically most of the time it oscillates around 0.8, 0.7, 0.9.
Yeah.
And this is most of the time, right? Whenever it goes on the negative, whenever it reaches like minus 0.5 or less, typically the lines coincides with the market lows, which is interesting. However, most of the time you're gonna find it in the upper range of the 0.1, 0.5 towards 1, closely reaching the movements of S&P and Nasdaq. So because of that, you're going to see a lot of phenomena that basically from the seasonality of stocks, right? So you can think of the Bitcoin. One of the main conclusions that from the works that Jeff and I did back in the day, and a huge shout out to Jeff. He's such an absolute guy. Was the conclusion that Bitcoin is can be considered a more volatile beta stock, basically more volatile Nasdaq, right? Stock, and it tracks the 8 against 4 month seasonal pattern, much more closely than 6 to 6, just like Jeff often highlights the best 6 months and the best 8 months for Nasdaq, for instance. Bitcoin tracks it very well, and that ends up with a positive July quite often, right? So July can be considered as this last positive exit window against the summertime lull, the summertime slowdown, and the doldrums that just basically makes a lot of people just go and fancy a drink on the beach when a sunny day in front of the open ocean, rather than just clicking on the computer and then generating the volume and the transactions, right?
Right.
As a result, lower transaction counts, lower transaction volume, less of a reason for the market to stay up, more of the reason for the market to stay put or to stay down, basically, right? So all things concerned, I consider July, first of all, to be similar to S&P and to Nasdaq, which is again quite positive most of the time.
Sure.
Statistically, on a month-to-month basis, on the return side, towards the end of the month, the second half of July is stronger than the first half of the month. After fairly average June of 2%, you're looking at 10%, 8-10% of the return on the July side on average, which is quite a heavy outperformance against June before. It's a multiple fold better, and that, like I said, just oscillates right now with an overall anticipation, of the first rate cut after a long time, because there have been a series of a lot of rate cut pauses, the 4 rate cut pauses, and still very, very high rate interest situation, which, like I said, in terms of the geopolitical risks and the trade war, that the effects are starting being felt right now. Altogether may require a little bit of an emergency setup for immediate rate cuts for the economy to, let's put it this way, not to suffer too much. And of course, when the U.S. suffers, the whole world suffers after it, right? Yeah. So there's a strong leadership there, and so July being the strong one, typically you can expect August to be flat or a little bit negative, September to be negative at 6.5% on average loss. On an annual loss average, like I said, and the Q4 on the comparison level, earns 51%. So you have minus 6% on average in September, which is the only strongly losing negative month for Bitcoin. And then you're running right into typical bottom setup into late September, early October, when the markets bottom up. Also on the stock side, if you remember 2022 and seasonality of stocks at all.
Sure.
Basically ramping up the whole performance for the Q4, which makes me think that a Q4, if lucky, But again, I don't want to put my wealth management based on luck. I want to just probably use the strength to exit rather than just run crazy and then run away from the losses in 2026.
Sure.
I prefer to have a structure for it, and the structure basically means that, well, in the light of the momentum principle, that the more the market goes, basically technically the more reason there is to stay done to exit, except that this window for crypto is very, very short. So when the time happens and you have to run, you're going to have maybe a couple of days until the market basically drops 30%, right? And when it drops 30% on top of the mountain, well, this is the peak of the risk. So you're taking 30% of the most extreme risk amount that you can handle, and you're just basically putting in a trash because you haven't done so before. Right. So I'd say for the knowing crypto industry, it's very dramatic. It's very extreme when pushed out, by the behavioral reasons and by the trending environment that technical analysis can be known for and explain a lot of those behaviors. Then we're looking at a pretty decent July, rather weak end of Q3, pushing us into potentially nice short sweet window for exit into strength of Q4.
It's a really great way of combining what we've seen with the trend and the seasonality work that you've done. I really appreciate that, Adrian. What can you speak to? What are the charts or the tools that you would use to really track a potential downside rotation in Bitcoin? Now, obviously, the daily chart, the weekly chart, testing all-time highs in pretty consistent uptrends. What would you see on charts like this that would tell you, okay, that's the moment Bitcoin's topped, I need to be out of it if I'm not already?
Well, as I were to rephrase and kind of like paraphrase each and every single show that you have, Dave, you would probably want to see the numbers first, right? So if the most bullish thing that the asset can do is go up, the most bearish thing that the asset can do is go down,
For
right?
sure.
So as long as the prices continue to incline, that's a decent tendency for all in order to have it, except that in specific case of crypto, it's going to be very, very rapid turnaround. So for the rapid turnaround, again, not to suffer the most, you have to watch it very, very closely in the shorter timeframes. However, those shorter timeframes are not going to be sufficient to just have a timely exit. So my particular case, it's going to stretch out, like I said, over the next 6 to 9 months. So that's one thing, independent, because there's like a lot of liquid investments that they're going to become liquid and they're going to be unvested. And there's like stepping in and out of real estate also is not as quick as buying and selling crypto. So it also takes time. Buying, selling gold, selling, into passive income of hedge funds, for instance, it all takes time, for which you have to have time as well with this tiny narrow window of crypto exit. However, the simplest indicator that anybody can have is basically watch the 200-day average, the simplest 200-day moving average, right? Good old 200-day average. You only come up and invent 50,000 indicators to come back and admitting that 200-day average is basically one of the best indicators you can have, right? We know that from technical analysis. So
yes.
all things combined, as long as it keeps going up, that's a positive factor that makes you think that this trend is more likely to continue than to reverse. Until if you watch this exponential moving averages with some more sensitive front-weighted averages, then you're gonna see some inflection sooner than on the typical arithmetic average. So you can watch both of those. You can watch the crossovers, for tell you basically how much momentum there is lost, the proximity of the prices against the average. If the average is very close to the price as well, and they have been running very, very fast, it means that the averages have caught up with the momentum of the prices. The momentum slowed down, and it's most likely going to transition into a little bit more of the sideways. Of course, technical level, support, resistance, observe the volatility, which typically at the peak is the biggest. So whenever there's an extreme reached across the fundamental metrics of on-chain, and there's a peak and there's a record and everything, and there's the record institutional kind of like an interest on the ETF side, and the price peaks, and like I said, it just goes on and stretches on, and all of a sudden it cuts off because a lot of insiders are leaving. And you're going to be able to tell that basically by the ETF flows basically going extremely negative for a couple of days or weeks straight. It means that there is a financial distress. It means that there is this massive kind of like an internal exit from a lot of big players. And that typically collides with and coincides with the biggest mainstream interest, right? So you have the mainstream interest that is the biggest, that it peaks, that everybody talks about crypto. Each and every single piece of news is about crypto. The radio stations talk about crypto. You see crypto commercials on the TV. If you look in a fridge, there's Bitcoin commercial, right? And whenever that peaks, and you have the coincidence, like I said, of technical indicators telling you that there is a risk of, for instance, moving averages being very tightly close to the prices, which
Yeah.
means that there's not so much advantage anymore, not so
Yeah.
much momentum. The volatility is at very, very high level, which means that the risk is at very high levels. Well, I consider that as a serious warning, and for me, it's going to be serious enough to take a bigger chunk of the chips off the table.
Adrian, I don't know if you've ever read books by Humphrey Neal. There's a famous book. I think it's called The Theory of Contrary Opinion. This was a book written like in the 1960s or 70s. And the era this guy was operating in, he's talking about like clipping headlines from newspapers and magazines and keeping a notebook. But what you just described about looking for everyone's so euphoric that you want to start playing the other side is right out of his thinking, 50 years ago, 60 years ago. So I love that is still the way that you're approaching that market. I can't disagree. I think that's a really interesting perspective from someone who's, I think, brilliantly been able to ride the crypto growth to date. Adrian, this has been a ton of fun. I hope this isn't the last time we can have a conversation like this. I've had a series of questions I've been dying to ask you, and we got to a lot of them, and I'm so thankful for that. I hope you and I get a chance to sing together someday. I hope that is on the menu, and I would look forward to it. But in the meantime, I say thanks for coming on the show, and stay safe. Be well, all right?
Thank you so much, Dave, for an absolute inspiration to so many people. Thanks for everything that you're doing so well.
Hope you enjoyed that interview with Adrian Zduńczyk. Adrian's awesome and a really knowledgeable practitioner in the cryptocurrency space. He's my go-to expert when I have a question on Bitcoin halving or hash rates or something I read about or hear about, and I want to know how a crypto insider would think about that information. I always send a note to Adrian. He's always been generous with his time and expertise, and I thought today was just one of the best conversations I've had with him. Hope you appreciated his comments. I mean, we talked for a lot of it about the constructive general trend case for Bitcoin, and Bitcoin literally, as we're recording the interview, close to making new all-time highs, which it did later in the day after our interview. But at the same time, I thought a very thoughtful and rational way of considering the run that Bitcoin has had and why he is starting to actually think about unwinding positions in Bitcoin over the next 6 months or so. Really interesting, and I really appreciated Adrian's take on applying technical analysis to the crypto space, things about on-chain data, which are things I randomly hear about but never really understand. Really appreciated his willingness to share some insights there. I would encourage you to check out the seasonality work that he did with Jeff Hirsch of the Stock Traders Almanac. I know they shared some of that on social media, and I hope you can go back on Adrian's feed and check it out as well. Hope you enjoyed that interview. Always encouraged to interview new people. This interview in particular came from a request. Someone had asked for a crypto expert on the podcast. I hadn't spoken with Adrian since relaunching my podcast, so I was happy to reach out to him. What other topics, themes, or particular guests would you like me to consider? Please let me know. You can drop a comment wherever you're hearing this podcast. On our YouTube channel is the best place where I tend to get some great requests and suggestions. So drop them in a comment there on our YouTube channel. That's just called @Market Misbehavior. And I look forward to hearing your suggestions there. By the way, if the charts we looked at together seemed intriguing, if you want to learn how to apply your own expertise to the financial markets using the best practices of technical analysis and behavioral finance, I hope you'll consider our Market Misbehavior Premium memberships. 3 great benefits to the premium membership. Benefit number 1, you will have immediate access to our virtual courses. We'll start with Flight School Behavioral Investing, where we teach you all about some key behavioral biases and how we can use technical analysis to improve our situational awareness as investors. Benefit number 2, our members-only reports, like our weekly flight plan, which we put out every week, where we look back at the week that just happened. What did we learn? What was new? What was different? We look forward at the week to come. What levels, patterns, signals we're on the watch for. Also, our monthly chart review, which we just put out earlier this week, where we apply our proprietary market trend model to a series of ETFs and asset classes. Finally, you'll have access to our members-only community, a community of like-minded investors encouraging each other, asking great questions. I'm in there every morning looking for questions to answer, things about specific charts, different technical indicators, suggestions about money management techniques, trading journals, kind of everything. My goal there is to be a mentor, hands-on mentor to a relatively small, group of active investors. I would encourage you to check it out. You can find more information at marketmisbehavior.com/premium. When you check it out, do make sure when you check out to use the code PODCAST, and that'll give you 30% off your first 12 months on any plan. That's it for today. Thanks so much for joining me. As always, on the Market Misbehavior podcast, I wish you happy trading and much joy and fulfillment in your life. And remember, it's always a good time to own good charts.